Well, the financial world, Jen's bracing for the presidential election and the outcome, just like everybody else. Uncertainty about the economy and public policy are causing wild swing daily in the markets as we hit the 1 week mark, 1 week till Election Day. Now, Friday, FBI Director James Comey revealed an investigation into emails from a top Clinton aide, Uma Abedin. Authorities are looking into sexting allegations against her estranged husband, Anthony Weiner. Same day the news broke, the market tanked. What's going on? What do we expect? Joe Krier, president of Krier Wealth Management, here to discuss market reaction come next Tuesday in the presidential election. All right, the markets are ready for what they call a black swan event, which is a metaphor in the investment community for a what the heck, a surprise.
Yeah, totally unpredictable event. And, you know, if this campaign and election season has been anything, it's been unpredictable. Here we are 7 days out, and who knows how many breaking news events you're going to have along the way, much less once one of these people gets elected. Who knows what's going to happen in the weeks and months after that.
It's my understanding from the things that I've read that no matter who wins this election, investors are going to be seeking a safe haven, fleeing from riskier investments.
Yeah, it's been interesting to observe. Actually, investors have raised an awful lot of cash along the way here. Institutions as well have as much cash on hand as they had back at after the September 11th attacks. And people are just, it's a high level of uncertainty. So being safe rather than sorry seems to be the strategy right now.
If you get past all the mudslinging on both sides and you look at their plans, both seem to want to increase spending, both want to seem to cut taxes. Is that bullish for stocks and bearish for fixed income?
Well, typically it is bullish for stocks if government spending is up, you know, and we've had unprecedented government spending over the last 8 years. Remember, 2 election cycles ago, we were in absolute crisis when Obama was going up against Bush. Now we've got a situation where the economy's been kind of sputtering, trying to get started, and interest rates have been at all-time lows. The Feds are meeting today and tomorrow to decide if they should raise interest rates, which would be kind of unprecedented leading up to an election. My guess is they'll do nothing today and tomorrow, but in December, they're going to start raising rates. And, you know, that's the kind of thing that could be a headwind going into next year.
Assuming we do have a winner next Tuesday night, and assuming somebody does give a concession speech, do you think there'll be an immediate market reaction? And if so, is that all it is?
Great question. You know, we think that if Trump wins, there's going to be a major negative market reaction. You know, there's a lot of people out there that say, my God, we can't see the world with Hillary at the helm for the next 4 years. Well, there's a lot of people on Wall Street who say we can't see the world with Donald Trump at the helm. And the main reason is that she's more of a predictable entity. Nobody knows what Trump would do if he gets out there, and he's got a lot of plans, so to speak. But from a Wall Street perspective, change is really the thing that rattles its cage. They want continuity one way or another, and Trump represents kind of massive change, but no one knows exactly what that looks like.
So is it safe to assume, given history, that the first year is going to be a little bit rocky before we really get a handle on where the economy is going to go under whoever's tutelage?
Yeah, it tends to go that way in the first year of a presidential cycle, particularly when you don't have an incumbent in there. You know, if Obama was running against Trump right now, at least we'd be hearing some positives from his side versus the negatives on the other. In this case, we have negatives on both sides, and investors, institutions, and retail investors alike tend to pull back when that's the case. They also want to make as many changes as possible, as early as possible in their presidency, so that the marketplace has a chance to adjust by the time we get into the next election cycle 4 years from now.
And then there are the world markets.
Yeah, the global situation is tricky. And, you know, one of the things benefiting the U.S. over the last few years has been that we've been less chaotic than Europe and Japan and China. So, you know, that trend, I think, is going to continue. If we get a big drop after next Tuesday, look at that potentially as a buying opportunity, because the world still sees us as the best economy on earth and the best place to invest money on earth.
I'm putting the money I have left in the area under my mattress. Joe, thank you.
All right, Brady.